The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.
Ladies and gentlemen, welcome to our weekly investor series. I'm your host, Rachel Curlew, AVP of Investment Banking. Thank you for joining us for another investor briefing, where we'll be looking at our Mayberry's results for Q1. Joining us today will be our CEO, Mr. Gary Peart. Welcome, Gary.
Hi, good afternoon. Thank you, Rachel.
If you're a fan of the content...
Good afternoon.
Good afternoon.
Go ahead.
If you're a fan of the content, then don't forget to subscribe. Also, hit the bell to stay up to date with the channel. We upload content like this once a week. I remind you that we'll have our Q&A segment, so don't forget to submit your questions in the live chat box. If you want to embark on your first investment journey, you should take that first step with Mayberry. Follow us on social media to learn more about how you can get started today. And now let's get right into it. I will start off by looking at the performance highlights for Q1 2023. We'll see that slide on the screen. Year to date, net profit attributable to shareholders declined 172% to a net loss position of $497 million relative to a net profit attributable to shareholder figure of $692 million. This resulted in total shareholders' equity is now at $26 billion, a decline of 10% to relative to last year figure of 20. Sorry, I can't see this. I'll continue. Year to date, net operating profits declined 100% to a net operating loss of $10.5 million relative to a gain of $1.5 billion for the prior quarter. Total assets are up 17% or $7.5 billion to $53 billion relative to $45 billion for last year's quarter. And finally, our net book value per share declined 5% to 13.60 cents relative to 14.32 cents for the prior period. Moving on to the next slide, let's look at some financial highlights for the period. Net interest loss. We booked a net interest loss of $35 million relative to a net interest income of $75 million for the period, 150% decline. Fees and income declined 10% to $80 million relative to $90 million for the prior quarter. Our net unrealized gain on investments declined $1.4 billion to result in a net unrealized loss position of $283 million relative to $1.1 billion for the prior period. Other operating income remained relatively the same at $228 million. This resulted in an overall net interest loss position on other revenues of $10 million relative to $1.5 billion last year. Other operating expenses increased 30% to $589 million, up from $454 million last year. After taxation, net loss attributable to shareholders is at $496 million relative to a net profit of $691 million for the prior period. This resulted in a loss per share of 41 cents relative to an earnings per share of 58 cents for the prior period. And finally, total comprehensive income to shareholders now stands at $2 billion relative to $978 million reported last year, a 120% increase. Looking at the next slide, this is the profitability metrics in graphical format. We are seeing here a decline in net profit which is the light blue, net profit attributable to shareholders, and total comprehensive income. This is mainly due to a pullback we saw in the equities market, which negatively impacted the gains from investments in our associated company, MJE, but we'll discuss that a bit later. Looking at the operating expense analysis, the company continues to achieve efficiency in its other operating expenses line item. This declined 2% to a ratio of 49% relative to 51%. Depreciation and amortization also declined slightly. That's the green box you're seeing there. Provision for credit loss, which is the red box you're seeing, that increased slightly due to the related balance sheet growth in our loan business. And finally, staff cost. The company still experienced some efficiency here, despite staff salaries increasing slightly to account for regular inflation adjustments. On the next slide, we will look at the summary of changes on the statement of financial position. We're seeing where total assets are up 16% or 7.5 billion to 53 billion relative to 45 billion reported the prior period, mainly due to increases in investments in associates, MJE by 4 billion, and also a 2 billion growth in our loan book for the period. Total liabilities are up 24% to 27 billion relative to 21 billion booked the prior period. Equity attributable to shareholders of the parent company now stands at 16 million, a 5% dip relative to 17 billion reported the prior period. The notes at the bottom says, as of March 31st, 2023, Mayberry Group's stockholders' equity was 16.3 billion, down 856 million, or 5% from March 2022, and 456 million since December 2022. The year-on-year decrease of 856 mil was driven by a 846 mil decrease in the fair value reserve attributable to a decline in the unrealized gains on fair value through operating income, as I mentioned earlier, and this resulted in a net value per share of 13.60 relative to 14.32 the prior year. Again, displayed in graphical formats, we see here MIL's balance sheet remains strong with a 16% growth in total assets to 53 billion, as I mentioned earlier. This slide now depicts Mayberry's book value versus its stock price. The blue line represents Mayberry's share price, and the green line represents Mayberry's book value. Typical rule, whenever we see the blue line, that's the share price, below the book value, which is the green line, those stocks tend to be undervalued and most times present great investment opportunities. MIL, as you're seeing there, is currently trading below its book value, about 6-8% below. So once, we can confirm here that the stock is trading cheaply on a book value, and the same is actually true on a PE basis. But once PEs start to trend back up, the stock is definitely going to make a jump. So you guys want to take advantage of that opportunity while it's still on the table. Moving to the next slide, we can assess Mayberry's stock price movement over the last 2 years. Okay, perfect, that's up. Again, the stock is trading cheaply on a PE basis. It's trading at $8, around $8 region. The last few days, it peaked at $10.25 back in February of this year, and we saw a peak at $12.46 this time last year. Again, the stock is trading cheaply on a PE basis and both a book value basis. The stock is trading at a PE of 8 times to the local market PE of 10 times. Looking at this slide, we can see here that MIL is a strong dividend player. Sorry, a strong dividend yielding stock, dividend player, yeah. So last year we paid out about 372 million in dividends. The year before, 405 million in dividends. The company paid as much as 688 million pre-pandemic. So, hopefully we can get back to that level. But this just shows that Mayberry is a strong dividend yielding stock. If you look on the side on the next page, this strengthens my point. The green line here is net book value per share plus cumulative dividends, and the blue line is the net book value per share. Again, this just demonstrates that Mayberry is a perfect stock for both capital appreciation and dividend payments. We're seeing here where the value is $16 on a cumulative dividend basis, and moving from $3 10 years ago, and the book value is currently at 13.98. MIL is a great company. We did see some fall off in income, as I mentioned earlier, due to the decline in unrealized gains in our associate company, MJE, which resulted, unfortunately, in a net loss position of $284 million. We have made strategic decisions in some solid companies, for example, CPG and SVL, and I have no doubt that these companies will continue to add value to the MJE portfolio in the future. But I'm going to throw this question out to CEO Peart. Are you here with us, CEO Peart?
Yeah.
Perfect. Can you comment, before we even get started with anything, can you comment on the unrealized loss position that investors are seeing on our P&L?
The investors that follow Mayberry shouldn't be surprised. We own over 50% of MJE. The stock market in the first quarter pulled back pretty significantly. And so, MJE generated a loss of about $600 million. And if you own 50% of that, you're going to own 50% of that loss. So what it shows is that the share loss from MJE was sufficient to overwhelm the other trading and profit activities in the gain line. So, the share of profit was about share of loss, was approximately 300 million. But if you'll notice, the total impact on our P&L was 200 and odd. So we saw in Mayberry itself that we had a really good quarter in terms of trading. But the reality is that it just was not sufficient to overcome the fall off in the stock market in general. But what we have seen is, notwithstanding that, total equity still grew to $26 billion, which was significantly above the $23 billion for the same quarter last year. So what it shows is that, again, the diversified nature of the business and the group shows that we can absorb these type of activities. And as usual, as we've always said, stock market will come back, and with it coming back, so will the value.
Thanks for that. And I'd also like to add to that, Gary, our capital base remains robust and well over regulatory benchmarks. So I'd just like to throw that one in there. So moving a little bit away from MJE, Gary, Mayberry raised $6.3 billion from the market in the form of a public bond back in January. We issued this bond in 4 tranches. Yes. It was oversubscribed. I know we disclosed in our prospectus the uses of these funds, but let's just remind investors, what do we have planned for this money, and just in the event they're questioning why there is a net loss position on the P&L.
Well, yeah, I think it was a big highlight for the first quarter. We were able to raise, we wanted $5 billion, we got in excess of $5 billion. And, it took us into at least the first half of the first quarter. Because that took over for January, etc. We have deployed the funds, and as indicated, the majority of the funds were aimed at issuing new margin loans, etc. It took some time to deploy them. But at this point, it's fully deployed. So we expect to see a lot of the benefit from that flow into the second quarter.
Perfect. And we can't forget the special interest payment, the one-off discretionary interest payment that we gave our investors.
Yes. So So one of the things that occurred is that usually in a bond raise, for the period of the bond raise, the investors don't earn interest, but we took the decision that we would actually pay interest for that period. So our investors actually benefited from the time we got their application, which, we've gotten favorable feedback on that as well.
Yes, I was certainly happy to receive my special interest payments. So,
You're welcome.
So, Gary, the Jamaican economy is rebounding pretty well. GDP is forecasted to grow about 45% for the March quarter. Inflation is almost in line with the BOJ target inflation. We're hoping that the markets will return to pre-pandemic activity levels in the short to medium term. What would this mean for Mayberry for 2023?
Well, I think the market is setting up pretty nicely for Mayberry. Thankfully, as you've alluded to, inflation, which is the most important thing right now, inflation is just above the range. The BOJ range is between 4 to 6%. The last set of numbers that came out suggests that inflation was on or around 6.1%. So it's basically at the upper end of the range as we speak. Now, what that means is that you've seen where Bank of Jamaica paused the increases in their interest rates, for this very same reason, because you have a lag effect. And I think with inflation continuing to go down, you might very well see a position where maybe within the next 3 to 6 months, interest rates start to move the next direction. And as you know, there's an inverse relationship between interest rates and market PEs. And I think the moment you start to see that the interest rates start to come back down, I expect the market PE multiple to increase, which I think would give a nice rebound in certain stocks. And as you know, Mayberry is perfectly positioned for that. And so looking for the rest of the year, I would expect to see certainly the portfolio in MJE increase in value in a material way. And obviously we own 50% of that. So that where you see the negative 200 million now, I expect that by the end of the year, that should be a positive number.
I agree with you there. And just to add to that, there are two solid companies in the MJE portfolio, SVL, CPJ. SVL is on track to make about $1 billion in profit for the quarter, without even factoring the imminent expansion into Ghana. And CPJ is a tourism stock. The tourism is up pretty nicely. According to the statin data, hotels and restaurants, that's up 16% for Q4. So again, I expect SVL and CPJ to add some great value to the MJE portfolio. Moving on to my final question before I head to the Q&A segment. Not really a question, rather, but just to remind investors that yes, we believe strongly in the equities market. Chairman himself always remind investors that's one of the best ways to create wealth. But MIL does extremely well in its Cambio business. We also have one of the best yielding asset management products and pension products in the market. And we continue to deliver value through our real estate play, through our subsidiary company, Cherry Hill. Gary, can you just touch on that for me, please?
Sure. Actually, in the profit and loss, you'd have seen our loss from our share of associates was approximately $20 million. That loss was primarily driven from the activities. So as you know, we actually built one building and sold it last year. We have actually started a second building. And as at the end of the quarter, we hadn't finished that building. So the costs associated with that bled through the loss on associates. But the good news is that the building is now complete. We expect a positive surprise in the second quarter from those activities because we're on the verge of getting tenanted. That project is almost at an end.
Perfect. So that actually answers David Rowe's question. What real estate developments are to be completed in the subsequent quarters, as noted in your associate? So, David, as Gary said, there's a surprise coming up for Q2. Let me move on to another.
No, I said expect a positive surprise.
Sorry.
You could get one.
So expect a positive surprise. Second question from David Rose here, Gary. When is Mayberry's interest income expected to rise to match the growth of interest expense from the MIL bond, which has consumed interest income? I think I can answer this one if you want.
Sure. I indicated it before.
Yeah, you did.
As you can imagine, you hearing me?
Yeah, man, I can hear you. Continue.
Sure. As I indicated before, we completed the bond raise probably up to the middle of the first quarter. And so therefore, in getting the cash, you have to then invest that cash. And, I would say for the majority of the quarter, there are some portions of the cash that was not invested in higher yielding assets. We have now fully invested that cash. So the answer to the question is that you would start to see a turnaround in that net interest income as quickly as the second quarter because the funds are not fully invested.
Agreed there. There's actually about 2 billion cash and cash equivalents on our balance sheet as of March. So, David, you heard,
Yes.
funds are now deployed. So we should be expecting an improvement in that line item for the quarters to come. Another question from David Rose, pretty popular today. What was a significant jump in staff expense and other expenses related to the bond, the Mayberry bond offer? I think I can take that one. The jump in staff expenses were due primarily to inflation adjustments in salary and the provision for credit losses. Our loan book also grew by 2 billion, so naturally that would have also grown. I'm not sure if you want to add anything there, Gary.
Yeah, I think also, especially related to the bond, there are incentives that were paid out to the staff and also for other activities. So we expect to see the revenues associated with that show up in later quarters. That's the nature of working at Mayberry. We believe in incentivize our hardworking staff to give their best.
Yes, absolutely. A question here from Philip Burgess. Why are the Mayberry bonds not yet tradable on JMMB's platform? Philip, that sounds like a question for JMMB.
Oh, JMMB?
Yeah, so please redirect there. Feel free to provide a response for other investors.
But you should tell a gentleman he could open a Mayberry account. They're tradable at Mayberry.
Absolutely, and that leads me to another question that I have here. We not just create shareholder value in our P&L or even through dividends, but we have one of the best online applications, Gary. I've heard it countless times. I use that platform for everything. When will our digitization process be completed?
Well, I don't think we'll ever complete the digitization process because, our customers keep asking for more. So if you remember when we started out, it was just an app that could give you your statement, which was a huge hit. And it has grown over time. I mean, now you can actually buy and sell equities. You can buy and sell a foreign exchange on the app. So that process continues. I mean, I know there might be people that want more. So every time you please the customer, they want more. And that's what we try to do. Mm-hmm. So it will evolve over time and it will get much better over time. And I think right now it's probably one of the best, if not the best, financial services app that's on the market right now.
I definitely agree with you there. As I mentioned, I use the app myself. Whoops. 1 second, guys. Sorry about that. Another question here. Apart from the Royal Medical transaction, which was an exempt distribution note that we raised for persons who don't know, does Mayberry see itself bringing any more IPOs to the market in short order? I think I'll take this one first and I'll have Gary expound.
I'll ask my investment banking department to answer that question. Rachel?
Fair enough. David, we have definitely seen a pickup in the capital markets. We can all agree some transactions slowed due to the high interest rates and just some uncertainty in the market. So we do have a pipeline of IPO that are coming out. Stay tuned. We have one that will be coming very soon. And we have about 5 to 6 that's coming out. So you can sit tight and wait on those. Sorry, I'm just going through the questions here. Question from Garvin. Any update on the reorganization of the group structure?
Yes, we've finally gotten a court date. We're actually been trying to bring it closer. So there's final traction there, because that starts the process. And I think once we have the court date and we submit the relevant documentation, then the court decide and then advise us the next step. So keeping fingers crossed, it will get done this side of 2023. And as I said, once we get in front of the courts, we'll have a better idea as to timing. And my expectation is it will definitely get done this year.
Okay, perfect. So hopefully, Garvin, we can give you further updates in our upcoming investor briefings. Question here from Devon, Gary. Can you give a little bit more detail on the investments made in KEO World and how it will benefit the bottom line of MIL and SPL? Well, guys, this is MIL's investor briefing, so we'll just stick to MIL for today. But Gary, over to you.
Right. So KEO is one of the leading fintech companies in the world. We, Mayberry, as well as some other investors, made an investment into that business. It's private equity, so it's not traded on a public exchange. Mayberry has a subsidiary that's called Whitebase Limited. That's the vehicle that we hold the majority of our private equity transactions, which includes Cherry Hill, etc. So, you can read up about KEO World. As I said, it's one of the leading fintech companies out there. Fintech is a big thing internationally, and we think there's a race on to find a company that does it the best. We believe KEO will win. That will be one of the companies that win that race. And as with private equity, if indeed it works out that way, there is likely to be a huge financial windfall. At that point in time, if it plays out as expected, that gain will come onto the books of Mayberry via Whitebase. So where you see this section in our P&L that speaks about profit or loss from associates, it would flow through there because Whitebase is 100% subsidiary of Mayberry Investments. So that's how the benefit will come. And as I said, there isn't a specific timeline on the liquidity event for KEO, but we believe it is hitting its expectation, if not exceeding its financial expectations. And we hope that within the next 2 years we should see at least a small liquidity event, and people then understand the power and the growth of KEO.
Thank you for that, Gary. Another question from me here. If we're all agreeing, that we're expecting the market to pick up for this year, but if the market continues to show signs of slowdown as what we've seen in Q1, how has Mayberry and MJE been preparing for this?
Well, I think that's an excellent question. So even though the market pulled back in the first quarter of 2023, remember that they had a massive pullback in the first quarter of 2020. And I think that demonstrated the resilience and diversification of the Mayberry Group, because the stock exchange, I think, lost anywhere between 30 to 40% of its value in 2 weeks. And MJE, whilst MJE did record a massive loss, it still had its equity only fell 50% in terms of its share value, which showed that if the market can pull back that significantly, and MJE can weather that storm, the expectation of seeing that type of pullback is not likely in the near future, or even I don't know what the further future shows. So that's the nature of the stock market. It doesn't fly straight through to the sky. You'll have ups and downs, and That's why we invest. I'll bring you back to the genesis of MJE at the time of Mayberry West Indies. We started with a portfolio of stocks that had a value of about $10 million US. At its peak, MJE was around approximately 150 million US. And even after the market pulled back in 2020 by that 30-40%, at its low, MJE's value was around 60 to 70 million US, which is still 6 to 10 times above where it started. So that's why Mayberry invests in the equities market, because whilst you'll have some volatility over the long term, the value creation is one of the largest you will see in any asset class: real estate, fixed income, etc., foreign exchange. The stock market beats them all the time. But this is what it's about. You're gonna have to weather some of these downturns, because you're supposed to buy when stocks are cheap and sell when they're high, not the reverse. So these dips creates buying opportunities for us. And as you see from the balance sheet, we have liquidity on the balance sheet to take advantage of some of these dips in the stock. And you have to keep an eye on the fiscal and the fiscal side of what is happening in Jamaica and also the world. 3 months ago, nobody thought about where interest rates would stop, right? In December, there are people that were looking at selling off some stocks. In January, it continued, which is why you saw the pullback in the market. Now you're in a situation where the market has pulled back, but you're now seeing where interest rates are likely to go, maybe as quickly as the next 3 months. Where are you going to get the stock from, right? So if you weren't buying as the stock has been coming down and you want to jump into the marketplace now, where are you going to get the stock from? Because Mayberry is not going to sell it, because we want to buy more, right? And that sophisticated investor, has already been in the market, and we're seeing signs, where there are certain stocks where they've turned simply because there's just no supply. So, the question about if it goes on further, we have liquidity. That's, we've just raised $6 billion from the bond market, which, as I said, some of that cash can be used for that purpose. MJE itself has a lot of liquidity, and as I said, they have been taking advantage of some of these bargains in the marketplace right now. So we're perfectly positioned. The Mayberry Group now has crossed a $50 billion mark, and we just continue to grow bigger and bigger. So we continue to be prudent, we continue to watch our liquidity levels, but we also continue to identify value and extract that value. And I think now is a very good time, not just for Mayberry, but for really sophisticated investors or smart investors to be looking around and taking advantage of some really, really good buys in the market.
I absolutely agree with you there. And, one free advice to investors today: we've already identified a company that's trading at a discount, MIL, trading at a discount based on a book value and a PE value. So go ahead and get some of that while it's still on the table. And as Gary said, its volatility should increase. Mayberry rather, is properly capitalized to withstand any shock that would come in the market. Gary, we have a question here from David Rose. Why did Mayberry have over $5 billion in client payable outflows in Q1?
Sorry, go ahead.
Why did Mayberry have over $5 billion in client payable outflows in Q1?
It's normal. It's a normal part of the business. money. A lot of money moves around in the organization. It's a financial services organization. So depending on how we position, will determine, at any point in time, quarter over quarter, whether you have client payables increasing or decreasing. So Mayberry is one of the more liquid financial institutions there. And depending on what is happening, you satisfy clients' demand when they come in.
Thank you so much for that one. And final question that we have from, again, David Rose, very popular today. He actually submitted his questions.
It's a David Rose show today.
Yeah, he actually submitted his questions before. Some of them we addressed in the presentation, but this one...
He's one of the better reporters, I understand.
And we do value.
Sure, we love to answer David questions.
Yeah,
Any questions he has, we answer.
Yeah, we do value David. Thanks a lot. Why has Mayberry cut down on the repo, the asset side, when the liability section is flat year on year?
So repeat the question.
Sure. Why has Mayberry cut down on the repo, the asset side of the business, when the liability section is flat year on year?
So again, it's just a function of how you structure your asset and where the value is. So we might invest in less repos and invest in probably more equities or currencies, for example. So it's about positioning the business and how you position the business at any point in time. So I might move out of repos and then issue more margin loans, which is one of the things and activities that we spent the back end of the first quarter doing, as indicated in the bond prospectus, that we'll be increasing our margin loans because that's where we think we can get some really good returns and boost the market at the same time. So you're going to see movement in those asset classes, and I think that's what he has picked up.
Perfect. Thank you so much. Another one here. Does MIL have any plans to come to market for additional capital in 2023? If yes, in what form? This one is from
I think the answer to that question is definitely yes. And I say definitely yes because I'm using the traditional definition of capital. So capital is defined as debt and equity. No, we are not coming to the market for equity, or we're not likely to come to the market for equity, but we definitely have to come back to the market for debt because one of the tranches of the Mayberry, I believe, matures in December of this year. So, we have the option to pay it out or to roll it over. And as our business expands, it's an opportunity to go to market. We actually, since the bond closed, we were actually, we actually got a lot of questions about, when are you going to do the next one? Because some people didn't have the liquidity at the time. And, we think as we look on our business and how the business is growing, we might very well use that opportunity at that renewal to maybe take on additional debt. But it depends on where the marketplace is. But certainly, as our opportunities grow, we will take on more debt. But we also have to operate within the regulatory requirements. And Mayberry has one of the largest capital adequacy ratios and buffers. So we're always, I tell people, Mayberry is conservatively aggressive. So we spend a lot of time before we invest, but when we invest and think we have something very good, we're aggressive at making it happen. So let's see how the rest of the year plays out. As I said, I think the market is setting up very nicely for a jump in the next couple of quarters. And I think with that value creation, it might create other opportunities for us to come to the market. But let's see.
Perfect. Thank you so much. 3 things I want to comment on, Gary. Our bond actually is a 13-month bond. It matures in February. But what I think you meant to say was we're going to be tapping the market from the end of December to just ensure that we have a successful rollover of that bond. That's the first point. The second point, really the jump in the market that we're going to expect, our margin business for those who don't know. And I think we were the first company to introduce leverage in an equity portfolio. And, while those opportunities are there in the market, feel free, we have some cash we want to deploy and, just to ensure that you are staying ahead of the opportunities, you can take advantage of that product that we have on the table. And final question here. Oh, I do want to mention one thing, but I'll go after that. The final question here we have, does MJE have any plans to add additional companies to its portfolio for 2023?
Sure. We add and subtract companies, on a frequent basis. Whilst we have 3 or 4, anchor anchor companies, so SVL, CPJ, Lasco Financial. We actually hold approximately 30 stocks. And so, those decisions to buy and sell, depending on what is happening in the marketplace, occurs every day. So the answer to the question is yes, there will be changes for obvious reasons. I can't tell you what the specific changes are, because you can't give away the secret sauce, but we've seen some very interesting opportunities presenting itself, so as I said, I find that you have some people who sell when the stock is falling and buy when the stock is increasing, and we try to do the reverse, right? And as I said, we see some nice opportunities out there, and we are currently engaging in taking advantage of that.
Thank you for that, and I must add that MJE has grown tremendous over the years. Gary, Chairman, and Vice Chairman Mark Belly, you guys have done an exceptional job of growing that portfolio with little to no leverage. I don't know how you do it, but I commend you guys, and we definitely can expect some value added from MJE, which will roll up, as you know, they've consolidated the MIL financials, so we can expect some bump there within the year. Let me see if I have any more questions here. No, but I want to comment on something. Gary, we spoke about the Mayberry raising a public bond from the market in January. And since then, a lot of our clients have asked us, I want to list a public bond. Our bond is right now the largest on the JC. And again, Mayberry is always trendsetters, always, market leaders. How do you guys, so my question is, how do we always stay on top of the market?
Well, the simple answer is that we listen to our customers, and we try to satisfy their demands. And usually the customers are trying to find an easier way to do things. And, we take pride and pleasure in being able to satisfy those demands. So, when we started with the app, customers, didn't want to call into the company. And we found that one of the things that took up most of an advisor's time was to give a client a balance. So we created an app and, allowed the customer to view their statements from the app. And it was widely successful. And then, our customers started to say, okay, we want more. And so we just try to find solutions to customer expectations. And I think that is the secret sauce for us being ahead of a lot of the competition.
Thank you so much. And we're going to end right here for today, guys. But just to recap, Mayberry balance sheet remains strong. Total assets at 53 billion. Shareholders' equity, 16 billion. Again, our capital base remains robust and strong, well over regulatory benchmarks. It's a solid company, one of the few companies that came out of the pandemic with not much deterioration to the financials. Total loss attributable to shareholders is actually 455 million, not 2 billion profit mentioned earlier. That was actually for the full year. So profits attributable to shareholders for the period is actually a loss of 455 million relative to a profit of 978 million for the prior quarter. And that is it for today's discussion. I'd like to thank our viewers for tuning in. Your support is always appreciated. A big thank you to Gary for bringing another insightful briefing. If you're curious about updates on our virtual investor forum, then find us on social media. We share our live stream dates and upcoming guests on our official social media pages. Give us a follow to learn all things forum related. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe, and remember, wise investors, slow and steady, wins the race. Thanks, everyone.
The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades. where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum. Investing in Jamaica.